Hello and welcome to LAT's Weekly Market Insights. The dollar is extending gains this morning in the European session as the dollar received a fresh impetus from Fed Chair Jerome Powell. His lack of pushback against high Treasury yields yesterday has enabled the US dollar index to push to fresh highs for the year. As we look to the left-hand chart here, we can see euro dollar, that major sustained uptrend still, of course, intact, with a pullback towards the 61% fib now on the cards. But any signs of an earlier push higher were halted previously as we saw this aggressive shooting star. Of course, a bearish reversal pattern which prompted and pushed euro dollar lower. The fundamentals coming through from Jerome Powell yesterday has strengthened the dollar, and we've seen continuation with another strong bearish candle coming through on the close of yesterday. Early this morning, that dollar strength we have seen continue. The big question now is, can euro dollar push through this major support level we're now approaching, along with this 61% Fibonacci retracement region? The dollar index, of course, made up 60% by the euro dollar, is also showing signs of strength. We are seeing this downtrend of lower highs and lower lows being tested, with for the first time the price now popping its head up above that previous lower high, and at the same time breaking this potential downtrend. If we see a break and a close above this, that would signify the end of this downtrend and perhaps some more positivity and bullishness coming into the US dollar coming into next week. The RBA, alongside this, has stepped up QE purchases. The Bank of Japan has intervened today, and the ECB is working hard with verbal interventions as to possibly extending PEPP next week. The indice markets remain fragile, with significant levels either being tested or broken across the board. As we come to the S&P 500, pull up that chart, we can see the higher highs and higher lows still intact. However, some stronger and more significant selling pressure has forced the price back down through on this daily chart, the 61% retracement. We have closed below those levels. However, some of the other markets, the Dow Jones still holding that 61% fib, holding support and holding these lows previously set at the tail end of last week. The European indice markets, with the DAX still erring on the side of bullishness. Yes, we have seen some negativity and some bearish sentiment coming from this shooting star at resistance, but the higher lows do remain intact. The uptrend also still remains intact. So we'll be looking to see, can the DAX have the oomph to break through that resistance level? The one market that's looking marginally more vulnerable is the Nasdaq. The tech sector here has broken down through some previous higher lows. Key support levels broken here at 1273. However, again, falling straight into the path of this 50% Fibonacci retracement, and key support coming from this level that previously acted as strong resistance back in November and September of last year. Despite this potential fragility, oil remains bullish after the boost from the OPEC Plus meetings this week, which suggested production cuts could extend through till April. As we look towards that oil chart, it has been nothing but positivity and bullish nature. However, we are rapidly approaching significant weekly resistance. Resistance coming here around that $66 a barrel, and then beyond that to the highs up here at $75 a barrel. Previously, when we tested these levels, we did find key resistance here on this weekly chart, firstly coming in the form of this shooting star, and then the next test of that level presents ourselves with this lovely bearish engulfing formation. For the time being, no signs of reversal. However, as this week comes to a close and we move through to next week, we'll be looking out for any potential topping patterns to potentially see a corrective move, or if we're going to break straight through this on that continued positivity of an en masse opening of travel, vaccinations, which could push us through to that $75 a barrel region. As we look towards this afternoon, non-farm payroll is on the cards. Now, US jobs growth likely accelerated in February as more services businesses reopened amid falling new COVID-19 cases, quickening vaccination rates, and additional pandemic relief money from the US government, putting the labour market recovery back on a firmer footing, and of course for further gains in the months ahead. No doubt economists, traders and investors will be looking towards this figure today to try and give them that additional boost and confidence they need to continue buying into the dips in markets such as the Dow Jones, which are testing, of course, these key levels. All eyes towards that data at 1:30 today. No doubt it could make for an exciting week's trading. We'll be on the lookout for further vulnerability, or are we going to see this dominant uptrend reinforced and continue back to the top side? That's all from us this week. Please do join us same time next week.